Good afternoon. Currency, it's the largest and most liquid market in the world. I'm Bridget Taylor, and this is Currency Wars. Right, let's have a The rand's traded a lot stronger this week against the dollar, and this is after trading 12.20 at the end of last week to retest back down at 11.80 as global factors support the local unit. Meanwhile, in the US, releases continue to confirm the moderation in the US economy, with the durable goods data last Friday disappointing, as well as the weaker... You went off air. Oh my God. The whole thing? Yes. Okay. I don't know what's happened. They said it's just everything's just died.
Powerful, yeah.
Yeah. Yes, I will. Yeah. Yeah. So I'm not going to say that. I'll just say welcome back, and I'll just apologize, and then we go into the next part. Right. Apologies, we're back again. There seems to have been a glitch in the matrix. So let's have a look at the whys and see what happened in the week before. The rand's traded a lot stronger this week against the dollar after trading 12.20 at the end of last week and retesting back down to 11.80 as global factors support the local unit. Meanwhile, in the United States, the data continues to confirm moderation in the US economy, with durable goods disappointing last week Friday, as well as the weaker than expected US consumer confidence, which fell to 95.2 in April from 101.4 in March. GDP was even weaker than expected, with the Q1 2015 print of just 0.2%. This marks the softest rate of growth since the first quarter in 2014. But notably, the exports were under severe pressure, and this reflects the impact of the strong dollar on the economy and not necessarily the weather, as many are assuming. The FOMC statement yesterday was front and center, and they noted the pace of job growth, which has slowed, household spending's declined, and the business environment has softened. But despite the weak data, the Fed maintained that it's going to expect to hike rates in the second half of 2015. In the Eurozone, the news from Greece is that the government has altered its negotiating team, which could help to make some progress in reaching an agreement with their creditors. The Greek bond yields have plummeted lower over recent sessions, which has seen the 10-year bond yield break through the 11.1% from recent highs of 13.5%. The next major test for Athens is on May 12, when the government has to pay back the IMF 700 million euros. There's been a rebound in the global commodity prices, with the price of iron ore delivering to China at 27% higher than the April lows of last year. While the coal and Brent crude prices also rebounded, the combination of the weaker dollar and the rising optimism that the Chinese central bank will come to the rescue with additional stimulus are supporting emerging market currencies that have a commodity base. Right, I'm very glad to welcome my guest today. It's Jan Slees-Kramer from RMB. Thank you very much, Jan. Sorry about the little glitch in the matrix. It keeps us on our toes. So let's have a look at what happened this week. I mean, we've had, the Rand initially opened at that, the last time we were talking was around that 12.25. We weren't sure whether we would see, in fact, the Rand break above those levels with the xenophobia, with the issues coming out of governments, unions, etc. So what is your feeling with regards to us seeing the Rand back at these 11.80 levels? What for you have been the major drivers?
Look, I think, we've spoken about it before. I mean, the Rand is in a broader range, probably 11.75, 12.25 with a little bit of an overshoot either side of it. This week has been a good week all round for emerging markets. We've seen a strong comeback. We've seen a lot of stop losses being triggered in the Rand. And I mean, yesterday at one stage we were looking at even breaking below that 11.75, 78 support level. However, it kind of failed in New York, and we did end up closing a bit higher. And I think, given time and given everything else, we should start seeing a slightly stronger Rand, especially with the dollar being under pressure. And after yesterday's figures, it's not looking all that rosy in the US. The Fed has pushed out interest rate hikes. They say in the latter part of 2015, you could probably realistically look in the first quarter now of 2016. So, that whole scenario of, raising rates in the US is kind of off the table.
But it's interesting when you listen to the different comments that come from the Fed officials. So, there's all this negative data. We've seen the jobs creation has been disappointing. The market hasn't forgiven the US for that. We're looking at durable goods. We're looking at GDP, the growth scenario, also on the back foot. And the hawkishness of the statement has started to come back a little bit. So they're a little bit more dovish. But when you talk, if you listen to what some of these Fed officials are saying, negating all of this data. It's really strange that they're still so pro the second half of the year, talking about weather, talking about the impacts of the weather, when nobody talks about the strength of the dollar and the impacts that has had on exports. So going into the second half, do you think that we're going to continue to see this moderation, or do you think we're going to gain some momentum in the US economy?
No, I certainly think, let's be honest, especially on the east coast of America, was quite a brutal winter this year. But you can't just consistently sit there and go, well, it's the bad numbers are a result of the weather. We've definitely seen a slowdown in spending. The jobs market, and we've said this on a couple of times now, hasn't really been that great. But going into the second quarter now, going into the summer months, we should start seeing a pickup again in the data. Whether it's going to be strong enough to actually go ahead and raise rates, I somehow doubt that very much. And, the strong dollar has certainly hurt, and it's not only hurting the US, it's hurting a lot of other economies. We've seen China cut interest rates. We've seen some of the other emerging markets look at wanting to cut rates. So it's all good and true to say the US want to hike rates, but when everybody else is cutting, it becomes a bit of a double-edged sword there.
So we're on as a South African economy, specifically on the back of commodities, we've obviously got an opportunity now. I mean, as you mentioned, the Rand back at these levels, potentially if we continue to see this sort of slowdown, if we see continued pickup in terms of the Chinese economy, do you think that we're in that bottom end of the range, or do you think that there's the very real chance that for sort of the medium term, looking towards September, when we, obviously looking for some sign from the FOMC again, whether or not they're going to in fact hike interest rates, that there is that respite in the Rand, and that we can expect to see the cross rates also behave favourably for importers? Look,
at the moment, I mean, today especially, the cross rates have been hammered hard. Euro Rand, we kind of opened at around about 13.10. That is now trading up at 13.25. The sterling Rand is really unmoved at the moment. That's sort of trading in narrow ranges. Dollar Rand, yeah, it's going to be interesting the next few sessions to see on our daily closes from a technical point of view. If it does close below 78. I think the bottom of the rand now is only going to be around about the 60, 63 level.
Yeah.
So certainly good opportunities to be buying dollars. You know, locally we've still got our problems.
Yeah.
They're not going away. We've got trade numbers later today, and that's very much a thumbsuck type of number. It can be fantastic, it can be very weak. It's very difficult to forecast that number. The petrol price is going to be drifting a bit higher again at the end of the month, so it's going to again put pressure on the consumers. Unfortunately, xenophobia, although it's died down for the moment, there's still the undercurrent. So infrastructurally and locally, we've still got our problems. So I don't see the rand strengthening that much. So certainly 60, 65 to me is going to be bottomish for now.
Okay, so we're going to look at where, well, now that we know where we stand, we're certainly going to look at the levels, and we're going to look at the, where to look at in terms of where to look to buy, because if these significant levels in fact do blow out, there is definite opportunities. Right, Jan, so it is time to pull out the big guns. So give us some good levels. What are the big technicals? Because now that, on the dollar rand specifically, that 1078 is quite a pivot. What is your view in the next sort of week and a bit? And then also talk to us about the cross rates.
Okay, so let's start with dollar rand. 1177.78 is your 100-day moving average.
Okay.
So that's quite big support. We did see it trade down to 71 in the late afternoon session yesterday when there wasn't much liquidity, but it still closed above the 78 last night in the New York session. 1194 for the moment is going to be topish on the rand. Very much data driven at the moment, okay. And also very much driven by what the dollar's doing. If we can see a sustained break above that 110 and euro dollar pushes on to 112, 113, we can definitely see the rand a lot stronger. Okay. For me personally, I'm looking for the rand in the next week to 10 days to actually pick up some strength. So I think any chance that we see up to the 1190s again, look to sell dollars, buy them back down at the 1160s.
Okay, so that's our trading strategy for the week. Thank you very much, and sorry about that glitch. And so in conclusion, if you're an exporter, you need to take advantage of rand. If it does get up to that 1194, closer to 12 level, watch the trade numbers today. They potentially could be quite dire. Other than that, exporters need to take advantage, but importers, hold on to your socks, because if we break below that 1178, it's a significant move down lower, potentially down to 1164. Until next week, I'd like you to send your questions and comments either to @CurrencyWars410 or myself, Bridget R. Taylor, for your personal responses to the FX markets. Until next week, good luck in the trenches.